Taxation on gifts in India. We know your buas and uncles love you and they express it through gifts. After all, is there any better way to show love and appreciation? But there's a catch. Did you know tax can be involved by gifting someone, especially if you're an NRI? Taxes can be a lot of headaches, but not if you know the rules and regulations associated with gifts, whether they are cash, property, or valuable items. Wondering whether the bua was right or wrong? Don't worry, let us help you. In this video, we will break it all down for you. The rules, the exemptions, and some handy tips to keep you clear. Whether you're giving or receiving, we've got you covered. But before we begin, like the video, share it with your buas and uncles and other NRI family members who give lots and lots of gifts, cash, property, and any other form. Let's dive in. According to Section 17 of the Registration Act of 1908, the NRI gift deed is a legal document required when an NRI gives a gift to someone. There are different types of forms of gifts and the taxability varies with different factors such as the amount, who is receiving it, and more. And guess what? There are some exemptions you can leverage too. Gifts from NRIs. Let us first start with taxation and exemptions on gifts from NRIs. Gifts in the following scenarios are taxable. First, if the gift is monetary in the form of cash, check, or draft and exceeds 50,000 rupees, then the gift is taxable. The amount will come under income from other sources and the recipient, the resident Indian, will have to pay tax based on their income tax slab dates. If a movable property is given as a gift and its value exceeds 50,000 rupees, it is taxable. The gift is taxable if an immovable property is given as a gift and the stamp duty value exceeds 50,000 rupees. So what we see common in all these three examples is the benchmark of 50,000 rupees. However, certain scenarios exist where the gifts will not be taxed or exempted. Here they are. If the gift is received from an NRI who is a lineal ascendant, descendant, or part of the specified relatives list. More on this in a second. If the gift's value is less than 50,000, it is not taxable, whether the gift is monetary, movable, or immovable property. If the gift's value is more than 50,000 rupees, but it is received from the list of relatives, it is not taxable. Finally, if a gift is received from an NRI on the occasion of a marriage, it is not taxable. This rule applies to any NRI who may or may not be a relative. In India, marriage is a supreme occasion and government seems to understand that and hence this exemption. We know you have two questions. First, who is counted as a relative and who is not? Second, what is the stamp duty value? So according to the Income Tax Act, the following people come under your list of relatives. Individual spouse, individual's brother or sister, individual spouse's brother or sister, individual's lineal ascendant or descendant. Ascendants are parents, grandparents, etc. Descendants are children, grandchildren, etc. Individual's parents, brother or sister, individual spouses, lineal ascendant or descendant, spouses of the people mentioned above. Now to the stamp duty value. The Stamp Valuation Authority determines the stamp duty value when registering immovable property. The valuation is considered when calculating the capital gains on property sales. Right, so that information might be a bit overwhelming, but here's a quick rapid fire quiz to see if you understand it. If a relative is giving you a gift, is it taxable? No. If an NRI who is not your relative gives you cash, what amount is taxable? Any amount above 50,000 rupees. If you're receiving a gift for your marriage, will it be taxable? No. If an immovable property is being gifted, what value must not exceed 50,000 rupees? Stamp duty value. How many of these did you get right? Tell us in the comments below. Here's a table that summarizes the taxability of gifts. Gifts to NRIs. Now, moving on to gifts NRIs receive from resident Indians. If the gift is from a specified relative, it is not taxable. If the gift is from a non-relative and its value exceeds 50,000 rupees, the amount is added under income from other sources and is taxed based on the NRI's income tax slab rates. If a non-relative gifts an immovable property to an NRI and its value exceeds 50,000 rupees, it is subject to taxes. For shares and securities received as gifts by NRI, the value must exceed 50,000 rupees to be taxable in the financial year. Besides these, NRI should remember a few important things when accepting gifts and remitting them. When a gifted property is sold, remitted cannot exceed $1 million in a financial year. Cash gifts must not exceed 2 lakh rupees. NRIs can receive gifts in the form of shares and securities from relatives. However, the value must not exceed 5% of the company's paid-up capital, and the NRI is eligible to hold the securities. Gifts from resident Indians can only be sent to the NRI's NRO accounts. According to the liberalized remittance scheme, NRIs can only receive a cap of $250,000 per year in gifts. Documentation requirements. What kind of documents do you need when accepting gifts? As mentioned earlier, you need a gift deed document to register any gift exchange between the NRI and the resident Indian. Both parties must sign all pages of the deed. As per Section 68, any big income credited to the recipient's account must be backed with a source and a motive. The recipient must explain to the assessing officer, which we also call AO, why the income credited is a gift and should not be taxed. For this, they'll need sufficient proof of the person's identity, creditworthiness, and the transaction's genuineness. In addition, recipients must have documentation attesting to the fair market value of the gift received at the time of the transfer. Penalty on non-compliance. If you do not comply with the gift tax rules, do not pay the gift tax on time, or do not pay it altogether, you will incur serious penalties. These penalties could be up to 3 times the gift amount. And additionally, the authorities may even decide to initiate legal proceedings against your actions. Thus, it is advisable to comply with all the regulations and pay that gift tax on time. To give you a quick recap of things, the Government of India introduced the gift tax to levy taxes on gifts exchanged. These apply to NRIs and resident Indians who may give or receive gifts. If an NRI or a resident Indian receives a gift from a relative, the amount is not taxable. If an NRI or a resident Indian receives a gift from a non-relative, the amount is taxable if it exceeds 50,000 rupees. Any gift to an NRI or a resident Indian is not taxable if it is for the occasion of the individual's marriage. While receiving gifts, NRIs must remember the terms and conditions stated by FEMA, or the Foreign Exchange Management Act of 1999. They must also be aware of limitations on how much gift they receive, the remittance limit, and the other specifications as mentioned in this video. Proper documentation of gifts such as gift deeds, proof of the fair market value of the gift and its proof of the identity of the gift giver and receiver, and other necessary documents must be maintained. All rules and regulations with regard to the gift tax must be complied with to avoid paying penalties. Before we go, it is important to remind you that the information provided in this video is not financial advice or recommendation. Video's content are for educational purposes only, and one must do one's own research before accepting or giving any gifts. And voila! We come to the end of this video. Don't forget to like, share, and subscribe. Also, taxation laws are expected to be updated every year, so please look out for any changes if you're referring to this video in future. I'll see you next time. Bye-bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.